Oliver, I want to talk to you about all of this. You've been listening and hearing some of the information that's coming out of the forum. How are these markets responding according to that?
Well, pretty quiet so far, which is a nice relief. Last week, we saw an average daily trading range for the corn in about 22 cents. So we're starting to subside and consolidate a little bit, which is healthy for the market and really not all that surprising. We do have March options expiration tomorrow, and a lot of times going into options expiration, you can start to see the volatility shrivel up, and that's exactly what we're seeing. And once we get past these March options going off the board tomorrow, a lot of the attention is going to turn towards that May contract. 552 to 556 is the big pocket that the bulls want to reclaim ground above. If they can achieve consecutive closes out above there, I think there's the potential to go retest those contract highs. If they fail to get out above there, we could start to see some additional consolidation, potentially long liquidation from the funds who still have a pretty hefty net long position. And I think you had mentioned the USDA forum. I think people are taking that with a grain of salt. There's a lot that can change between here, spring, and summer, and harvest.
Well, you bring up a good point. A lot of folks we've talked to today says it's still up to Mother Nature and anything else that could be thrown at this market. What about soybeans then?
Soybeans, we're just kind of stuck in the mud. Looking at that May contract, we've been trading in a 50-cent range, 13.40 to 13.90 for the better part of the last 3 weeks. Looking at potential technical breakout, we potentially see 40 cents added to that and a retest of contract highs at 14.33. On the flip side, a break and close below support, 40 cents to the downside, a little closer towards that $13 handle. And again, I think a lot of this is going to be focused on money flow, options expiration. We're also keeping a very close eye on developments in South America with regards to their harvest, which is behind pace, but I suspect that they'll probably be kicking things into gear a little bit more here in the coming weeks. And then we've got China coming back as well. So right now, range bound, but we get out on either side of the support or resistance, and there's 40 cents to go.
I don't know if you like roller coasters or not, but man, what a ride it's been over here in the wheat market.
Yeah, there's an old saying. I was joking around with some guys this morning. If you don't like today's prices, see what tomorrow brings. And we've just been seeing a lot of whipsaw. There's obviously some major concerns over winter kill. That is still, kind of a thing that's going to be drawn out, I think. I know that wheat is a very resilient plant, and a lot of these areas with some insulation, I don't think it's going to be a huge concern, but we're starting to hear some rumors from the Black Sea region that there might be some weather concerns over there as well. So I think that's adding a little bit more support into the market as we look towards the back half of the week. Ultimately, I wouldn't be surprised to see these higher prices get sold into and stay range bound between 630 and 665 for that May contract.